My name's Keith Brown and I'm a certified exit planner. And today we're here to talk about exiting your business for the maximum value with the least amount of risk. That takes a lot of planning, and we know that the most successful clients that work with us are the ones who do the planning. The ones that don't get hurt. And I'll give you a little example. I've been a financial advisor for over 30 years. I've worked with hundreds of families to help them do succession planning, estate planning, financial planning. In 2013, I was lucky enough to sell my business for more than what we expected to sell it to. In March of 2013, my partner approached me and said, Brownie, I need to leave. We need to sell the business. I don't want to do this anymore. I was personally not prepared for that transaction and did not expect that I had to sell it that soon. As a matter of fact, we were planning on holding it for another 10 years. Had I done the right planning, I would have saved myself $550,000 of income taxes that I paid because I was not prepared or planned for that transaction to happen. Yes, we sold the business for more than we expected to sell it for. We were very lucky that we were prepared for sale. We had proper financial planning and financial reporting was all done. The only difference was that I didn't do what's called an estate freeze my shares and cap off my tax bill and pass my tax bill on to some of my other family members. And it cost me $550,000 for not being planned. That's a personal story that's true. Yes, we sold our business successfully. From that experience, I went through and graduated as a certified exit planner, and I'm one of 3 people in Canada that's a certified exit planner. So we'll talk a little bit more about that today. The guidance and advice we're giving you today is not meant that you can take it to your take it and do your own planning. This is meant that we have a disclaimer here, and what we're trying to say is that this needs professional advisors. Don't try this at home by yourself. So what is an exit plan? We try to create a holistic approach of a series of steps to help a business owner plan from A to Z the inevitability of his or her departure, whether it's a successful sale or exit, retirement, or work all the way till they are taken out in a box. That's up to them. We need to create a strategy for every one of those eventualities. We want to make sure you receive maximum value for your life's work, and often this is life's work. There are a lot of key people in the organizations and stakeholders and key employees, family members. Often we find that business owners, when they start their business, they do employ their family members, they do employ friends, and everyone that's an employee typically over the years becomes a good friend. And so business owners care a lot about those people. We want to make sure we take care of them. We want to make sure that we reduce the tax burden. I foolishly was not planned properly. Even as a financial advisor, I did not expect to have to sell the business that fast. And I paid an additional tax burden that could have been avoided. We obviously want to make sure that anyone that's exiting doesn't make the same mistake I did. And we want to make sure that our business owner clients keep control of the whole process. That's really key. The benefits of an exit plan, well, again, we need to find out what the objectives are, and we need to build a team around that business owner to make sure that that happens. It's critical. We need to quantify the cash flow that the business is generating. We need to understand the assets and how to maximize the value of the assets. Chris will be talking about that a little bit later. We're going to talk about how to maximize value of the business. We want to make sure that the business keeps going. So anyone that's interested in buying a business has to depend on the management team to run it. So we want to make sure that we have a successful team in place and that there are agreements and structure in place to keep those people with the business in the event of a change of control, sickness or death of the owner. We want to make sure that those eventualities and inevitabilities are actually taken care of and prepared for. Strong management team, absolutely critical in the successful sale and exit of a business. And of course, time. When do you want to exit? On what terms? With what amount of money? These are all critical. Most of our business owner clients can't really say that. So we go through a series of steps in order to help them do that. So this is our 7-step process. I'll give you a quick overview of this, but essentially we need to understand what the owner's objectives are. then we need to do a comprehensive financial plan along with a business valuation, at least an estimate of the value of the business. So we bring in a business valuator to come up with that. Often the accountants that work with our clients are able to give us that information, or at least give us close idea of what the values are. We take all those financial resources and assess that and determine if they have enough money to retire, or they have enough money to reach all their goals and objectives, or do they need to stay in the business and grow it and make it bigger and more valuable. We want to maximize and protect the value of that business, and there's a number of things that we'll be talking about there. Chris Casardian will be talking in a few minutes. That's one of the things that he'll be talking about. This is important. If you have a business and you're not prepared to sell it, you will not get maximum value if you don't have the right reporting in place, management team, and so on. So growing and protecting the value of business is key. Then we'll consider who the best successors are. So transferring the ownership of the business to a third party, if that's the best choice, and that could be a strategic buyer or a financial buyer. So Chris will talk a little bit about that. We'll also talk about transferring to insiders such as key employees or family members. They may or may not be able to handle it. So we'll try to help you determine who the best successor, who the new leader should be, and how that would affect your financial situation as well. And then, of course, I mentioned this before, the inevitability is that you're going to leave your business. And so we want to protect the value of the business by making sure that plans are in place to keep the key employees with the business in the event of a change of control, sickness or death of the owner. So we create contingency plans and business continuity arrangements such as stay bonuses for key employees so that they stay no matter what the leadership is. We want to make sure all the agreements, our shareholders' agreements, are in place for other shareholders in the event there's somebody who wants to leave or retire. There's liquidity issues for the business for all of the stakeholders. There's lots of employees that we need to care for. Banks are really interested in what the business continuity plans are because they have a stake in keeping the business in going. And pretty much every business owner I know has a line of credit where they've signed a personal guarantee on their debts to the bank for their lines of credit for operating capital. And often the business owner doesn't realize this, but in the event of sickness or death, the bank still expects that all gets paid and all gets honored. So we want to create continuity plans to achieve the goals of the business owner and have a successful exit, which also includes getting off the hook with the bank. Once we've sold the business or we've gone through a transition of leadership in the business to key employees or to the family members, then we need to manage the assets. We need to make sure the estate plan matches with what the goals of the business owner are. And that's often an investment advisor, tax advisors, estate planning attorneys, insurance agents, all these sorts of things need to line up with the owner's objectives too. So if you add all those steps together, it creates a comprehensive exit plan, and that's what we're trying to achieve for our clients. Step one, what are your objectives? Again, I said earlier that business owners that are well financial planned have more options. So we can have a better chance at reaching the timetable of the owner if we have proper financial plans in place. We can make sure that the family members are cared for properly, that the business owner's family gets the value of the business no matter what happens in the event of premature death or sale. We want to make sure that we get the right person in place to run the business, so we will do a search for the right successor. We'll actually talk a little bit about the right successors in another seminar situation. So we'll talk about who should be the right successor, and we want to maximize the value of the business. And we'll often have to bring in some of the key people. We need to have the accounting people in the business involved in this, that we'll have a lot of reporting to do in order to sell the business properly. So we'll bring in the key stakeholders. Confidentiality is a big issue for a business owner considering exiting. If his competitors find out about that he or she is potentially looking at selling the business, they're interested in stealing the customers, and there's some and also the employees too. So that's a big issue. The other thing that a business owner would be concerned about is the loss of focus on the actual activities of the business and loss of, so if we take some of our key employees and have them working on exiting a business or selling the business, they're not focused on the everyday activity of the business, and there could be a loss of income there. And that's not when you want a loss of income. You want your business to be fully functioning when you're trying to sell it. We need to perform. So so in step one, we're going to look at all those things. In step two, again, a business owner, we need to determine what all the resources are that the business owner has and how those resources can be used to reach the owner's goal. So whether it's retiring at 55 or 75 or never retiring, and helping the children come in to take over, or helping key employees to take over. Often children and key employees don't have the capital or the resources to buy the business, so we need to find ways to finance that. Third-party sales to outsiders, a little bit different story. Often we'll get more money for that type of a transaction, but we find that a lot of our business owner clients would lean towards trying to have a family member take over the business, or a key employee take over the business. They're the ones who've been loyal and understand the business. So we need to understand what the cash flow needs are long term and what the resources are, and we attempt to do a comprehensive financial plan in order to determine that and whether or not we can achieve those goals. We work with a multidisciplinary team. So we typically have an M&A advisor, an exit planning advisor that would work with the business owner and all the other advisors. So there's a lot of financial reporting, there's a lot of legal work that needs to be done, there's going to be a business valuator, there could even be hiring somebody to do a strategic plan to help the management team be more cohesive or more productive and grow the value of the business that way. There'll be all kinds of legal agreements to work with the key employees so that they stay with the business and don't leave in the event of a change of control. So there's a lot of different professional advice that has to happen, or a lot of different team players that have to contribute. So we bring that team together, and it's often a combination of people that we would bring in and also the existing advisors that the business owner is currently using. So the inevitability is everybody leaves their business, and it may be in a box, it could be while you're disabled, or it could be luckily you sell it to a third party or to your family and you're successful at exiting and reaching all your objectives. One of the things that's of utmost importance for most business owners is that their families get taken care of no matter what. So whether the business sells to an insider or a third party, or they become sick or even die prematurely, we want to make sure that the family's taken care of. So we want to make sure all the goals that the business owner has on exit are achieved, whether he's there or she's there or not. So a big part of it is making sure that proper plans are there so that the business continues. Again, most of our business owner clients are very interested to make sure that all the key stakeholders are taken care of. The employees, the customers, the banks, any other partners, the family, obviously. We want to take care of all those stakeholders to make sure that the business keeps going no matter what happens to the business owner. We also want to make sure that ownership and control goes to the right hands, and there's a number of legal agreements that help us do that, shareholders agreements, and different wills and estate planning have to match with what the objectives of the business owner and the business are, so we have to go through making sure that all lines up. We make sure that one of the things that could happen in the event a business owner gets sick or dies, or a change of control for that matter, the key employees get nervous. They're the ones that we're depending upon to make sure that the business operates well. And if something happens, there's a change of control, someone gets sick or dies, the key employees are the first ones to leave. It's the opposite of what we all think, that they're the ones that are loyal and they've been with us for all these years. The fact is that competitors learn about it really quick, and they swoop in to try and steal the key people to come over to their firm and bring all the customers there. So we want to make sure that we do a good job in the continuity planning so that the key employees actually stay with the firm in the event of a change of control, which would be a sale or a premature death or disability, and the business owner isn't able to be there. We want to make sure that the family receives their interests, the key employees stay, and that there's a method for managing the risk in the event of all those things happening. So business continuity planning is critical for this all the way through the whole stages. And of course, if we are lucky enough to have an exit that is successful where we've sold to a third party, or whether we've passed it on to our children or to key employees, we have to make sure that we manage the assets along with the estate plan so that the family's taken care of, that our business owner reaches his or her retirement goals, and that we're able to achieve that for the long term. So that's really critical. Again, we have lawyers and accountants and all the other multidisciplinary team have to participate in this, and it's a really critical step. Thank you.